Hey investors, this is the November 2020 update for Project 1 Million. The year is passing by fast and we already have the election upon us. I don't really make investing decisions based on who's going to be the US president. But I do think that the elections has been having an effect on the market. The market has had a rough September and now October. But this gives us a good opportunity to add to our holdings. So that's what I've been doing, and I did make some changes in the Project 1 Million portfolio in October. I'm still quite pleased with the general performance of the portfolio so far this year. So let's take a look at it in detail. So this is how the portfolio looks like. My top 3 stocks, Amazon, Facebook and Google, make up about 45% of the portfolio. The next 9 stocks, Alibaba, Intuitive Surgical, Visa, Mastercard, Booking Holdings, Twilio, PayPal, Apple and Adobe make up about 34% of the portfolio. And together, these stocks make up about 79% of the portfolio, nearly 80% of the portfolio. So the performance of the portfolio will depend a lot on these stocks. Some of these stocks have done very well, maybe because of the pandemic, such as Amazon, even Facebook, and even I would say Google and Alibaba. Some stocks have been affected by the pandemic, but in my view temporarily only, like Intuitive Surgical, Visa and Mastercard. Some stocks were totally crushed by the pandemic, such as Booking Holdings, which saw a very steep drop in travel, and stocks like Twilio, PayPal have benefited from the pandemic. Even Apple to an extent has benefited from the pandemic, and Adobe has benefited from the pandemic, perhaps has seen some parts of its business also affected by it, but overall it's a very stable and good company to hold. But I think next year we'll see good performance from some of the laggards this year, like Intuitive Surgical, Visa, Mastercard, and even Booking Holdings could bounce back a little next year. I took some profits on Upwork, as we will see later in the history for the last month. So that's why Upwork is holding a little smaller percentage in the portfolio now. So the ones that I've highlighted in light green here are ETFs. So I have S&P 500, the Nasdaq 100, and I have this semiconductor ETF and the expanded tech ETF, IGV. Sorry, IGV is the software as a service ETF. IGM is the expanded tech ETF. So the stocks in red, like S&P Global, Autodesk, Microsoft, Beyond Meat, Teladoc, Baozun, Illumina, DocuSign, Nvidia and Netflix are stocks I'm keeping an eye on, and stocks that I'm interested to perhaps add to so that they have a bigger allocation in the portfolio. In fact, I did buy some of this in the last month, and I did add to some of them in the last month. So in total, our portfolio value is about 270,000. We have made about 63,000 this year. Our performance in 2020 so far is about 34.50%. I'm also keeping an eye out on other stocks that I don't already own, and maybe I will take a small position in them first so that I get more skin in the game, and then I can slowly build it up as I feel their valuations become more reasonable. Perhaps stocks like Tesla is one that I'm looking at. I'm also looking at Shopify. Next, let's take a look at what I did in October. So I've been collecting some dividend. I sold this covered call for Upwork. Um, I think these were the expirations of the previous covered calls that I sold last month. So the covered calls that I sold on Upwork actually got exercised. So that's the first time that happened. So I got back 4,000. That actually proved to be a good thing because after they were exercised, Upwork's price fell back down to below $20, which was the strike price. And so I had that cash, which I managed to deploy into some other companies, which I felt would give me better returns than Upwork. I like Upwork, and Upwork is still part of the portfolio, but I think Upwork had risen a little too fast, too soon. I sold a covered call on Under Armour. I bought Adobe, probably with some of that Upwork money. I sold this covered call on Under Armour. I bought some Nvidia. I bought Teladoc. I bought Netflix. And I also been researching Intel quite a bit. And generally, I like Intel, but I don't like it enough to take a position yet. So I'm selling put options on Intel. So I sold a put option here, I sold one here, and I sold one here. And this one gave me about $500 plus. So basically, this is for almost more. This is for slightly more than a year. And the strike price is $40. And Intel is actually a little near the strike price, is about $44. But I think Intel's price is quite depressed already because of all the negativities around the stock. So I think it actually will go up from here. But let's see. And then there was a big crash on the last day of October, and I bought more Teladoc. I still have a little cash left, nearly about 2,000. So I might buy a few more stocks in the next few days if the market falls a bit more. So let's look at the options contracts that we have. So these are the option contracts I have. A lot of them are actually going to expire in the second week of January next year. So up to here, they will all expire. The ones that I'm going to take a loss on are probably the two Carnival option contracts. They're probably going to cost me about 3 to 4,000 on these two option contracts. But overall, I think I still made money from the option contracts I sold, especially when the market crashed in March. And then now I've been selling option contracts for Jan 22. So you can see those over here, and you can see the latest Intel ones over here. So I hope I'm not overextending myself by selling too many put options, but I don't think so. I'm quite careful with the put options I sell, so generally I think I should be able to handle them. Let's take a look at the performance of my portfolio against the best ETFs and the best fund managers. So let's get into it. So we are beating the S&P 500. The S&P 500 is done only 1.45%. We are beating the main ETFs. We're beating VJT, we're beating IGM, and we're beating the Nasdaq. Nasdaq is done about 30% year to date. We're losing to we're losing to the Barron Fifth Avenue Retail Fund, which has done about 38%. And Berkshire Focus Fund is done great, is done 62%. And I've decided to add two more fund managers to the monthly comparison. It does make me look bad, but it doesn't matter because my goal is ultimately to beat the fund managers. And if I can't beat them, then I should be buying some of the stocks they are buying, or maybe just invest in their funds as well, a little at least. So the two that I've decided to add are The Scottish Mortgage Investment Trust, which has done about 75%, and ARC. I think a lot of you would probably know ARC. It's been quite famous in recent months. It's led by Cathy Wood, and ARC has done about 91% year to date. Amazing. A lot of the performance for these two fund managers has actually come from Tesla this year. So it might be a 1 year thing, or they might continue to outperform significantly in the years to come. So I'm going to keep my eye on them, and I'm also going to look at the stocks they are buying, and if I feel comfortable with those stocks, I might even add to my portfolio. But I think there are a lot of common stocks already, so let's see how it goes. So if you know of other fund managers who I should compare against, let me know in the comments. Preferably they should have at least a 3 to 5 year track record, and they should significantly outperform the market as a whole. If you know other good stocks that I should add or consider adding, let me know in the comment section as well. So I hope you had a good time watching this video.